All right, let's get into the Queen's Court here next. And obviously, that's the news here for a Tuesday. And we're starting out the week. Markets are where they are, hesitating up at the high, but there's always stocks out there to trade. There's always ideas to approach. There's always things you can be doing in the marketplace. And each week on Tuesday, the coaches at Tackle Trading, whoever's on the show, gets to present the Queen with one pick. And the Queen gets to decide whether or not it's good enough to remain alive for the next week based on the analysis, the setup, the interest, or if it's not quite there, off with their heads. Emily, you're up.
Well, since Gino, the last time he came in, he kind of came in the middle of it and I chopped his head off. I will let you guys go first so that he can kind of see how the game is played. So, Mark, I'll let you go first.
All right.
Gino heard his head could be chopped off and he left. Either he disconnected out of Zoom or
Gino's a very conservative trader. He's like, I do not like my risk reward.
He knows when to exit stage left. So
that's right.
Listen, I'm not afraid to gamble. All right. So here I go. You know how I like a theme, Emily.
Yeah.
And I like to develop a thesis for the things I do. And if anyone's followed me over the last year, I'm very open in sharing, not the pick. I have zero interest in sharing picks with people. I love sharing a thesis. I love sharing it because for two reasons. One, from a selfish standpoint, it allows me to work it out and verbalize it and see any internal chinks in it. And then to get feedback to see if I can improve it, if there's something I'm missing. And two, when I share a thesis in my life, it's like my old sports betting. I never would share a game pick unless I was really confident. And so there's a whole process in sharing a thesis. Well, over the last 15 months, I've made no bones about it. I've loved reopening plays. I've loved the discount. The trends were ugly at times. If you went to MGM or restaurants or cruise ships or movie theaters, or the trends and charts were hideous. But the thesis behind it was obvious to me. It was like, as long as companies had the liquidity to survive the pandemic, eventually smart men and women would find a cure to the virus and life would return to normal. And then when it returned to normal, you would have a lot of pent-up demand. Money was flooding the system. And those areas of the market that were beat up we're at a tremendous discount, in my opinion. Shared that several times over the last 15 months and has pretty much played to textbook. Well, that thesis is not over yet. There's still legs to go. Now, we're deep into that story, right? And maybe in 6 months or 9 months, we'll write the chapter on that and it will be a historical anecdote, but we're not quite there yet. We're not at a full reopening. There's still some doubt, I guess, a little bit. But most importantly, there are stories on the chart to tell us. Because while I develop a thesis, and sometimes price is just so cheap, I don't care what the technicals are. There was one point, Emily, that MGM, you could get $50 at the height of it for a $3 naked put. I mean, can you believe that? $50 for a $3 naked put. And that kind of stuff was everywhere. Even deep into the few months as the market started to bottom out. Well, as price starts to climb and as price no longer becomes a no-brainer, I'm not so cavalier at blindly. There are prices that I'll just say, nope, I'm going to buy that at. I don't care what the technicals say. But as price starts to climb and there aren't as many deals out there, if I believe in a thesis, then I'm not going to do it blindly. I'm going to base it on technicals. And I'm going to wait on technical patterns. Well, the pick I have for you today fits both of these things I've talked about. Still a thesis I believe in, the reopening, with a leg up or two from a directional standpoint, but definitely from a cash flow stability standpoint. And we're starting to get some of my favorite technical signals. Multi-month breakouts clearing major moving averages on weekly charts. So the stock that fits both of this criteria is Carnival Cruise Lines. Could you give me CCL? All right, so CCL obviously fits the thesis. Needed people, epicenter stock, survival in doubt, tremendous cash flow stock over the last 15, literally A plus cash flow stock over the last 15 months. It's been an amazing cash flow stock. Talked about it a lot. Well, took a leg up post-November, little pullback, took another leg up. And if you could give me the weekly chart to smooth out some of the price action, well, we've taken several months off, all right? That's healthy after a leg up. It's healthy after strong price movement. If you see things parabolically going up week after week after week, eventually reality is going to catch up, or eventually it's going to take a break. That's what a lot of the pandemic stocks have done. A lot of the epicenter stocks have taken a break. Now, some of them, though, I mean, we just looked at jets. Some of the pandemic stocks are a little healthier than others. And Carnival and the cruise lines in general fit that bill. So we have a little bit of overperformance recently, but most importantly, we have a multi-month breakout. Now, if you don't have it on your chart, but I use a variety of moving averages that we don't teach or talk about a lot of tackle trading, but I use them because algorithms use them, and my extensive study on moving averages use them. One of them is the 100 weekly, which has been descending on the chart. And if you put the 100 weekly on the chart, you would see that there has been, and let's do that, just because it plays a role in my analysis on the timing of things. Love the thesis, but we still got to pull the trigger, and I like to do that on technicals. Yeah.
I'll just change this into 100.
Yeah. And so what you saw, and when you examine the timing of the entry from an algorithmic standpoint, you saw that price came up, and it is very common for price to come up to a major moving average or come down and hesitate. If it's on the way down, find support, or if it's on the way up, get slapped down. And so what you had on the weekly chart is you had a major moving average acting as resistance along with a horizontal resistance level. You had rising moving averages along with a horizontal support. And this is now closed above it last week and confirmed upward price movement to start the week. So not only do you have a horizontal breakout of a multi-month consolidation pattern, which is all I need, to be honest, you got a little cherry on the top from an algorithmic standpoint on your timing of it with a break. And now you don't, if you look to the chart from a technical perspective, you got a whole lot of open error, right? So I love the theme. I think people are going to be coming back to cruise ships, just like they were coming back to movie theaters. I still think there are legs on cruise ships to go up. From a technical perspective, you got a whole lot of clear error. And you're starting the week with a nice technical signal of a multi-month consolidation breakout. Checks the boxes for me, but it is not up to me. I leave it up to your grace. I present you Carnival and the logic and technicals behind it.
I love how you're so passionate about your thesis, right? Like you just don't deviate from what your process is. And, the reopening thing, you've been talking about this since, God knows when. And, you've been hitting it And I love that you go through and find stocks that, are fundamentally, sound, like, between AMC and what's the other one? Cinemark, right? Like you look at AMC and Cinemark, you prefer Cinemark over AMC, like, because you've gone through and done your studies. So I know for you to pick CCL over anything else.
And one of the things that I didn't mention, when I started at the pandemic and I started looking at reopening, I tried to identify which company had the best liquidity coming into the pandemic. In movie theaters, it was Cinemark. In airlines, it was Southwest. In cruise lines, it was Carnival. Because one, it was about survivability, right? There was a real question whether companies would survive. But post-pandemic, who would be in the best shape from a fundamental perspective? So that's why Carnival has always been my cruise line of choice.
Yep. And I love that you even introduced something new. I don't even think I've ever used the 100-day moving average ever. But, when you apply it and you look at it, because I was looking at the 200 going, okay, it's got, it's got, I think at the 200 I was sitting at 40. But to see that it's now crossed the 100, It's above the 9 weekly. It's a pretty looking chart. I actually do not mind this at all. This is a very good pick. You survived this week, my friend.
Thank you, my grace. I live to serve.
All right.
This
All
is an
right.
easy one.
Well, I'm hopefully got an easy one for you as well. Last week.
Hey, listen, I died with Palantir last week, which I still love. I was going to come with an A+ analyst today, So.
If you had come with AMC today, I don't even think I would have.
I wouldn't. I don't trade Dogecoin.
Hopefully, I will come with strong analysis as well to see if I can live another round of the Queen's Court here. Give me American Express if you can. We're talking sectors here today, and obviously AXP.
Oh, I'm sorry.
No. I would never correct the Queen unless I have to. I have to get this analysis in there to hopefully keep my head. But no, American Express, obviously we're talking sectors today. Financials are one of the strongest sectors in the market. They fit so many of the themes that are happening with reopening and all of those types of stuff that we've been talking about for 7 months now post-election. People that use credit cards out there when they're spending and traveling and all that kind of stuff, it does create extra demand for American Express users. There's no question about that. Start with the analysis on XLF with its potential breakout as well, because there's a little bit there that I want to throw in here as to why I like, American Express. Number one, XLF, yes, testing a breakout today. Yes, looking gorgeous. Not quite as good, in my personal opinion, as American Express. If you look at the AXP potential breakout within financials, within credit services, there's a lot of really good components, but American Express is holding its gains for today on its breakout, even though it's on a very light doji. It was also a pick from the weekend options report. How do I know that? I was there and we talked about it in detail, and it was one of our favorite setups. So I know technically sound, coaches approved, all that kind of stuff from a short-term pricing perspective. I want to give you some fundamental and performance metrics as well, though, Emily. If you give me a 20-year chart on AXP, and I talked to my good friend, my dear friend, Coach Keith King, the Godfather, many, many times about these companies. American Express was always one of his top holdings as a 40-year investor in the market. Why? Because look at those trends when markets are good. Yeah, it suffers from market cycles like everybody else. 2008, we had the correction. Mid part of the decade, it went into a downtrend for a year or two. But watch how it just fires off and goes into multi-year trends. From 2009 to 2015, it had a 6-year trend. From 2016 to 2020, before the pandemic, it had a 4.5, almost 5-year trend. Here we are coming off on pandemic lows, breaking into new highs. And guess what? Forward PE ratio on AXP, 17. PEG ratio on AXP, which takes the PE ratio and divides the forecasted growth on reopening, 1.19, which, by the way, Coach Emily, is the lowest PEG ratio amongst all credit service companies over $10 billion in market cap. It's got technical leadership. In my opinion, it's got fundamental leadership, even through the pandemic, guys. I mean, their sales got hit last year, no question about it, but now they're starting to issue upward guidance. They're starting to see increasing sales numbers quarter over quarter. I love AXP here. I think it's fired off those lows, just like the financial sector has. It's one of the top leaders in financials. It's my pick for Queen's Court this week.
Another brilliant, easy pick. I mean, you guys are learning. Last week, I don't know why you guys went off ledge last week. It's just
every once in a while you want to gamble,
You don't gamble with the Queen, though. You can gamble with your buddies, but don't gamble with the Queen. I also think you guys must have paid off somebody to get into the Queen's computer to see what she's trading this week, because I actually have playing both AXP and CCL. So really? Somebody's getting some inside information on what the Queen is looking at. Either that or you're paying attention. So, but great picks. I love AXP. I think I even had this a while ago on Trade Masters, and I still got my head chopped off, but that's okay. But yeah, I love the breakout, significant whole number at 160. More potential to run after, consolidating here for a week, just trying to break out of that 160 level. So absolutely love AXP for a directional play. And the great thing about, such stocks that you can play them in so many different ways. If you want to go, directional, if you want to go cash flow, you have a lot of choices to pick from here.
Absolutely. Now, I don't know if that was Gino, Coach Gino popping back in here, sliding into our halftime report back. He had to bounce there for a minute. Gino, you there, my friend? We'll get him for final thoughts in a minute. We'll save him from having his head chopped off. He saw the court open. He's like, I'm out of here. And then he saw the court close. Like, okay, it's safe. We can come back. All right. No, but that's it for Queen's Court here today. Obviously, we were going to come with the heat here today, Emily, after getting our heads chopped off. You had to learn your lesson a little bit. You don't have to take the hard trades all the time.
No, not all the time.
I'm back, guys. I couldn't get my microphone turned on. Sorry about that.
No problems, buddy. Welcome back.
Want to hear what I got or not?
Yeah, sure. If you got a pick.
Oh, do you?
Yeah.
Oh, okay. I'll throw one in there. I like to swing low on Dogecoin. No, I'm joking.
Cut his mic off.
No, actually, I got an interesting one because I was doing this last week, and if the Queen likes it, I like it. So I'll let her decide if I. Tell me what you think of this. I'll present it as best as I can. One of my favorite cover call and cash flow plays in the last few months has been a company called FCX, which is Freeport McMoran, leader in rare minerals, copper. It's been on a nice run, great returns. I did start to go, wow, I should have bought more of these shares. It's been a good, you start going at your lead players for the year. And I said, let's go find another one of those. So through a little research, I came across a company called TROX, T-R-O-X, Tronox Holdings. Can you type that, T-R-O-X? So the U.S.-China trade tiff has impacted several industries. One such industry is the rare earth element industry. So nothing like, nobody really jumps out at this, but not a real exciting one, but these are rare earth is one of the crucial elements that makes up a majority of like electrical appliances, like smartphones, display panels, speakers, televisions, and stuff like that. So it's a weird elements of like lithium and weird things, neodymium, these little minerals we never hear of because we hear of silver and gold, but the ones I cannot pronounce, we're like, okay, do I really want to invest in those, right? But they're using this more and more. So these rare earth minerals, from my research, China is the only country that holds about 70% of the world's known rare earth reserves. So it's the dominator of the market. But now under the new administration, the Department of Energy has planned to make rare earth metals a priority among the domestic supply chain. So rare earth minerals elements are crucial to the administration's climate and technology policies and so on, electric vehicle production, and me, griping about oil prices. I could see that. Batteries. There's always a fight for a longer battery. So anyway, these companies, there's not that many of them. So TROX, along with FCX and a few others, looking at the fundamentals of this thing, its PE is sick. Its price to earnings, I think it was 3 last time I checked, right? A 3 price to earnings, 3.7. Now, when you see a low PE like that, you go, wait a minute, is something wrong? When you look at the growth of the company, they're expected to grow at 50 something plus % every year for the next 5 years. So they got a lot of sales and revenue coming in, and it's a very high demand product. So it's a big focus. So looking at it, this stock has come off of a base of $8 a year ago, and it's now at 24. And Tim was talking about something called a PEG, which is something I look at. Anything under 1 is considered good. Look at the PEG on this. It's not only under 1, it's 0.07. It's one of the lowest PEs I've ever seen on a company with increasing sales. So to a fundamental trader, it's a diamond in the rough. And it's also in basic materials, which is one of our favorite sectors. And looking at it, it's cheap enough where for cash flow, it might be replacing my FCX for a covered call. Looking at the covered calls, it does not have weeklies, but I can make 2.5%, 17 days out, 5% a month out, basically getting over $1 on a $24 stock. Looking at 45 days out, you might like this. I present this to the Queen. The naked puts at 19 and 20, which would be making the fundamentals the best in the entire stock market if it went down there. I see upside on this thing 230 in the next 2 months. And that's a low estimate. So just looking at this as a cash flow, diversifying my portfolio, getting away from the high flyers, focusing on the smaller caps like Mark was talking about earlier. This fits the bill and checks the box for me on everything I just talked about. So I present that to you.
Okay, well, this is actually not a bad one also. And the thing I like about, about
I'm
trading,
sorry. I forgot to tell you, it's also a tackle play. It's on our list.
I absolutely love it because when stocks start to run up, and you've been doing naked puts, on stocks, and then they start to get to that 50 price range, 60, 70, and then it gets too far high up and you can't do naked puts anymore. It's always good to kind of start to build another watch list of similar stocks, right? That you can still do naked puts and, and collect that cash flow and premium. So this is a very nice comparison, or an alternative to people who've been trading F6 and kind of feel like if it's gotten a little far away from you and you still want to remain in that, inexpensive $20, $30 range. This is not a bad one. So I absolutely love it. It's got enough, options and premium that you can actually go a little bit out. Even though it doesn't have weeklies, it's perfectly fine. It's got, some volume in these here. Bid and ask spread is 10 cents. It's not the greatest, but I can still play with that. So I don't mind that at all. And it's also, like you said, a good cash flow trade as well. Dividend yield of 1.31. So that's not bad if you just want to acquire it right away, or if you want to do the naked put. Either way is fine for me. I like where it's sitting at here at resistance, kind of broke out of there today. So that's good. I like it. It's good. Good for me. Good for the queen. You survive. You will not get your head chopped.
You must have had a really good Memorial Day weekend.
I did.
I like it.
I threw on some cash flow trades on Friday. 3 days of highlight, an extra day of not having to trade, and then you come in on a Tuesday. It's doji, nothing much is happening. What more can you ask for?